more buying time. How low will Chinese shares go? A new wind blows for energy. And a news roundup. The Shanghai Composite Index slipped below 3,000 on June 12, and there it remains, closing today at 2,736. The last time the index was this low was around the very first Sinomania show in January 2007. The CSI 300 Index, Shanghai and Shenzhen B shares, all major Chinese indices are down dramatically. Some analysts now believe the Shanghai Composite won't hit bottom until it falls to between 1,000 to 2,000 and might not recover for decades. After all, both NASDAQ and Nikkei are still below their peaks, and it took a quarter century for the Dow Jones Industrial Average to build back from the crash of 1929. Last May, in episode 15, I pondered if the Shanghai Composite would end up like the NASDAQ or Nikkei bubbles. I argued then that Shanghai was less meteoric, and unlike the dot-com and Tokyo property bubbles, Chinese companies had real earnings and long prospects. My prediction was a top at 4,700 at the start of this year. I was surprised, as many others, to see Shanghai go up all the way past 6,000 late last year. Values are down around 50% for the major indexes, but I think comparison to the far more mature American and Japanese stock markets is simplistic. There are too many variables with Shanghai, and this latest incarnation goes back only to 1990, the year Tokyo crashed. Will foreign buyers be allowed into the A market? Will A and B shares finally merge? Will outflows by Chinese retail investors be extended to all investors? I think it is entirely too premature to dismiss Chinese stocks as important and long-position investments, particularly in clean tech and green energy sectors. One investor who agrees with me is Jim Rogers, most famous as co-founder with George Soros of the Quantum Fund. At investment forums in Nanjing and Shanghai this past week, Singapore resident Rogers said he's not sold any shares in Chinese companies. I'm starting to think about buying again, he said, adding, there is much money to be made from investing in China. Warren Buffett accurately foresaw Shanghai's decline and sold his huge holdings of PetroChina shares last summer, though he did miss out on PetroChina's big price boom. A Chinese investment manager, Zhao Danyang of the Pure Heart China Growth Investment Fund in Shenzhen, won an auction today for lunch with Buffett with a bid of $2.1 million to Buffett's Glide Foundation charity. It is said the most recent declines in Chinese stocks one of the reasons is fear of interest rate hikes from China's central bank. Speaking today from Switzerland at the Bank for International Settlements meeting, People's Bank of China Governor Zhou Qiaochuan said he can't rule out interest rate increases. Morgan Stanley had been advising investors that interest rate increases were off the table this year. There are now serious material effects on the Chinese economy from the rise in oil prices. It is impacting trade with China's Asian suppliers and its target markets, specifically the US and the EU. Pundits and politicians talk of a rounder world soon, with the pace of globalization slowing, if not receding. Many observers say a hard landing imposed by Beijing is coming after the Summer Olympics. I think this chattering is wrong, but the pace of money growth and inflation in China is dangerous. Cash continues to pour into China, some of it due to US Federal Reserve action, some from trade surpluses, much more from investment inflows. Chinese foreign exchange reserves are on pace to reach $2 trillion this year. Given the negative impact of the oil price spike on China so far, Beijing is moving quickly to reduce its exposure to oil. At the start of 2006, China's renewable energy law went into effect, and big new state-directed investment is now underway in atomic power, including the latest technologies from the USA and France, and in renewable energy, particularly wind and solar power. I will have a lot more to say about investment opportunities in wind and solar in the months ahead. On June 19, in London, China's Renewable Energy Development Project, part of Beijing's powerful National Development and Reform Commission, won the Ashton Award for Sustainable Energy, the most prestigious green energy prize in the world. The prize was for work in photovoltaic, or PV, solar power technologies. Some projects of note involving foreign collaboration just this week. The Norwegian Renewable Energy Corporation, or REC, just signed an almost $500 million deal with China Sunergy, listed on NASDAQ under symbol CSUN, to supply solar wafers over the next 7 years. REC has plants in Washington State and Montana. RE Power North China Company, a joint venture with German RE Power Systems, will supply Guangdong Baolihua New Energy with 24 wind turbines of 2 megawatt size for an offshore wind farm off Guangdong province to be operational as soon as next summer. U.S. Secretary of State Condoleezza Rice left China today after a brief visit during which she met with President Hu Jintao and traveled to the Sichuan earthquake area, where she praised the local recovery efforts and gave a Chinese teenager a book about America's national parks. Meanwhile, in Beijing, envoys of the Dalai Lama resumed talks with the encouragement of the Dalai Lama himself and Secretary Rice. Despite talk about the world decoupling and globalization in jeopardy, China and the U.S. continue their strange convergence. Famous cereal maker Kellogg announced today it acquired Shandong-based Zhonghong Food Company, China's leading cookie and cracker maker. Kellogg will use Zhonghong to expand its product line to Chinese consumers. And Caterpillar will soon break ground on a factory outside Nanjing in Jiangsu province to produce smaller, under 20-ton extractors. Caterpillar will wholly own and operate the factory, its 17th plant in China, where the company already employs over 7,000 people. I hope your summer is off to a great start. See you next time on the Sinomania Show.